Welcome back after the break. You're watching Markets at Noon, and let's shift focus to markets once again. Today, a day of total green. Why I'm saying so? Because if you even talk about Nifty, just one stock in red, and rest all the stocks are trading in green territory. And so is the case with other sectors and stocks as well. But what should you expect for the market in next 1 to 3 years? How should you make your strategies? We have with us Aditya Sood to answer those questions. Aditya, welcome. Now that in past week or so, we have made an attempt to at least go beyond the last year highs. And today also a good day of trade. How do you see the markets in next 1 to 3 years, and what should be strategy of investors who are looking to put in money now?
Sure. So I think so we are coming out of a very lull period in returns. Last 15, 16 months, we have pretty much seen, market staying flattish. And, 15, 16 months back, there was a narrative that possibly, small and mid caps stocks are, looking slightly expensive. And there is obvious, sort of froth in the market on the small and mid cap side. But what we have seen is that, there is fair bit of consolidation which has happened, for last 15, 16 months. In fact, the last 2 months, what we have seen is that, large caps are doing really very well, particularly, led by, large companies like Reliance and State Bank of India and some of the banking stocks. Essentially, the Bank Nifty is also, looking very, very interesting from here on. So our view is that, the key for next 1 to 2 years, 1 to 3 years is going to be earnings growth. We saw a period of earnings growth wherein, we saw a very sharp, degrowth in terms of, the earnings growth rate of change from 25% from 2021 to 24. Then we saw a period wherein earnings only grow at, 4%. So I think so we are clearly in consolidation mode, and as we see mean reversion of earnings growth towards like a 10 to 12% number, we think so, that is a kind of return that you can expect from the markets going forward.
Understood. And since we are talking about earnings growth, firstly, afternoon, Ashesha this side. Mr. Sood, if you can take us through what your expectation is in terms of earnings growth for the second half of this year and then for FY27 as well. Because if we look at the kind of earnings companies have reported and basis the management commentary, the outlook clearly across the board continues to remain very positive from India Inc. What kind of earnings growth are you then penciling in, and which sectors do you expect to outperform?
We think so. Earnings growth is going to be more like 10 to 12% on the Nifty. Mid-cap earnings could grow at a tad, faster pace than the Nifty. So if Nifty base number is, closer to 10%, possibly, mid-caps can grow at, 12 to 14% sort of a range going forward. So that is, I think so, very, very clear to our mind in terms of sectors that we prefer. In this environment, we prefer NBFCs, we prefer banks wherein there is a valuation catch-up which can happen, especially, banks like, State Bank, for example, or Axis, wherein we see a scope of multiple expansion to happen from here on. So that is the banking construct. Within NBFCs, we like the mortgage-backed financiers. We also like gold loan companies, essentially, which is a combination of Muthoot and Manappuram. From here on, within pharma, our clear-cut preferences towards CDMO players, which are growing at a very, very healthy clip. Possibly some of these CDMO companies will grow at, northwards of, 25 to 30% in terms of earnings growth. Off late, we have started to look at, companies' value opportunities post the correction in defense as a sector. And we prefer hospitals as a play. We believe that there is considerable room, but one has to be careful in the sector because, the sector has got massively re-rated. So our approach has been to buy, sectors or hospital plays wherein we see considerable room for P multiple expansion from here on. And having said that, we also prefer MFI because MFI companies have seen a very, very large pressure on asset quality, which is obviously getting reflected in the the credit cost that they have reported. I think so. The credit cost should normalize going forward in these companies. And as an overall construct, we also like manufacturing as a sector, and manufacturing obviously has a wide basket of companies that you can play, in the market.
Right, you mentioned quite a few sectors, but how are you placed to view the AI bubble story? Because this is something which is talking point globally. And do you think there is some impact going to be in India as well?
I think so. Clearly, one has to be very, very careful on the AI, bubble side. If I look at markets, in 2007 when I was managing money, Nasdaq peaked at close to 170% in terms of market cap to GDP. Now today that number is closer to a 250% number, in terms of market cap to GDP, which has been the traditional indicator of looking at markets purely from a cycle perspective. Now to this, if you add the crypto market cap, which peaked at close to $5 trillion, the market cap to GDP number in the US possibly is more like a 270 to 80% number. On top of that, if you also add the housing, sort of market, because 2007 was a culmination of housing crisis and tech speaking out, essentially. Obviously, financials also did well. So India is going to be an ultimate beneficiary, because whenever we meet investors globally, people are too busy investing into top 7, 8, 10 stocks in the US, which have done well for last 13, 14 years. Although I would like to also point out that if you look at Indian valuation, the market valuation in context of global emerging markets, today the valuation is much, much favorable. If I look at a price to book metrics in terms of standard deviation, India is a very, very attractive market. So we believe that, once you see money moving out of US, it will find home to, markets which are growing. And obviously, India is mean reverting in terms of earnings growth.
Okay, and since you're saying that India is mean reverting in terms of earnings and now it looks attractively priced, at least as compared to what it was earlier, any particular sector which you believe from a valuation standpoint looks attractive now?
So we are looking at, PSU banks, some of the metal names, I think so, which are global plays on recovery. Obviously, near-term triggers in the market continue to be, possibly market is also sensing peace deal between Russia and Ukraine. It helps immensely in terms of debottlenecking of the supply chains. Near-term trigger obviously is, the US-India trade deal. I think so market today is also sensing that to happen. So we find a lot of value in metal stocks today.
Okay, so some sector specific ideas coming in all your way. Mr. Sood, thank you so much for taking your time out and joining us here on ET Now and helping us understand what the fundamental market setup looks like at the moment. On that note, we need to slip into a very short break, but more news and updates will continue on the other side. Stay tuned.